When does magnificence, as in the Magnificent Seven and maybe more, when do they make a return? I mean, what happened today, right? So first of all, before we dive into what's happening right now, I just want to give everyone a quick reminder. If you head on over to countdowntrader.com, the 5 points of what I'm looking for to start the new year is posted, and it's going to touch on two things to start off our conversation. Number one, why bullish? And number two, we're getting sector rotation to start the year. And how do we measure this? Well, measuring this is not actually in the price chart. There are two other places. Measuring this starts off with, why am I bullish? Rog, did you not see the sell-off? 400 points in the Nas? Yes, but did that sell-off break the trend? No, it did not. But I will tell you where it did break the trend and where we need to be cautious. So stick around. We'll talk about one of the magnificents that's, well, frankly, not that magnificent right now. One to avoid. All right, the target rate probabilities for March, gang. Take a look at this. It's tough to be a bear when Powell and company are doves. All right, what's with the animals, Rog? I don't want to have a bearish outlook on the year when the Federal Reserve is poised to cut rates. Right now, we are sitting at a 70.5% expectation for a quarter point cut in March, a 67.7% expectation for a quarter point cut in May, and in June, 67.1. So you might say, Rog, so what? Fed fund futures, target rate probabilities, what does that really have in terms of insight into what the Federal Reserve will do? I'll tell you from history, from experience, a lot. Because in 2018, Q4, right, Jerome Powell decided to go, I don't need to pause. I'll hike. And he crushed the equity markets at the end of the year and into 2019 Q1, where he realized, I probably should not have defied what the expectations were, because he did. You think he's going to do it again? Because in 2019, at that point, that was one of the swiftest, harshest, most panic-driven sell-offs that we had seen until, 2020. Okay? Powell learned from his lesson. I'm bullish. He sees, believe me, on their Bloomberg terminals in the halls of justice, right, where they dress up like super friends, the Federal Reserve is absolutely aware of what target rate probabilities and Fed fund futures are projecting to them that we, you and me, expect them to do. All right? Okay. So let's talk about sector rotation. That's what we're getting to kick off the year. If you've been a reader of the Top Tier Outlook, what are we getting? The outperformers wrapping up 2023, number 1, 2, 3 were basically semiconductors, tech, and communications. Throw consumer discretionary in there. The 4 heavily weighted sectors of the NASDAQ. You know, that index that hit all-time highs on a year that everything was supposed to collapse. Right. Here we are looking at those top 4. What happened today? They're in the bottom. Why? Because the laggards, healthcare and energy, most especially from 2023, had an unbelievable day. Healthcare, number 1. Utility, another defensive corner, number 2. There's your energy, number 3. This is what sector rotation looks like. Now, how long will it last? That's the question. And a lot of it will have to do with tomorrow's JOLTS release at 10 a.m. and FOMC meeting minutes. So it's the minutes of the previous meeting at 2 p.m. And we also have an ISM manufacturing PMI, another important hot zone. So that'll have a lot to do with the continuation of today's sector rotation. But we are getting sector rotation, gang. We kicked off the year with 2 of the major sector lagging sectors rallying, while the top 2 are selling off. And who's selling off and who's rallying is what makes sector rotation applicable here. It can't just be any old sectors. It's got to be the top performers seeing profit taking, while, the assumption is, and it is an assumption, gang, that profit is going into the laggards, namely healthcare and energy. Remember that healthcare and energy are strong today, as well as financials. So who's leading today? And this is going to matter for those of you that are fans of the S&P. Leaders today, financials, healthcare, and energy. This disproportionately benefits the S&P. So let's jump over into the charts. This disproportionately benefits the S&P. Think ES, think SPY, think SPX, right? So if I have tomorrow, the sector rotation phenomena is done, why would it be done? If the data tomorrow suggests the Fed should stay on their track of March, May, and June quarter point cuts, we could go into June already a half point lower than where we sit right now in the Fed funds rate. And after the June meeting, we could be 3/4 of a point lower than we sit right now. That's a significant and very swift set of cuts. Tough to be a bear. The S&P, despite the sell-off, gang, is still very much in an uptrend and barely, and did not hang out very long there, reached the volatility support of the daily price movement range. So not only could the NASDAQ benefit, but I'm not ruling out that the S&P might outperform. If tech just levels off, but healthcare and financials continue their rally as well as energy, that could disproportionately benefit the S&P and even the Dow. So let's not get too hung up on tech weak right now. Let's look at what could be strong, and the sectors reveal the secret. All right? And so Dow could benefit, S&P could benefit. Let's be wary of the NAS unless tech rolls around. Okay, so then what's wrong with tech? Remember I said there's one stock to avoid in the magnificence? When is the magnificent going to return? Let's not look for a lot of magnificence out of Apple. Not that I want to short it, but Apple's losing its green structure. Really important, because look what's not losing its green structure. Microsoft, these are the top three right here, gang. Microsoft, Meta. So Meta looks great. What am I looking for? What's that criteria? Couple basic tools on my charts. Green multi-trend. So the structure for Meta is bullish. Green multi-trend. All right? I mean, it's an uptrend. We're actually still above or in the 34 EMA wave. The 34 EMA wave is this green, blue, and red. So we're still above that. And the daily price movement range is in play. So Microsoft, Meta, and the final relative outperformer that I definitely want to buy the dip in, Amazon. Where's the chart? Here we go. So Amazon, same thing, right? We like these three. Avoid Apple for now, gang. Avoid Apple for now. Be very cautious with Google. Not that I want to short this thing. It's just not the same quality trend. It's Microsoft, Meta, Amazon. Google, neutral trend, but the daily price movement range is in play. Tesla. Here we go. Tesla, not a trend, but the daily price movement range is in play. Okay? That would be a great place to think about Tesla in the DPMR, which, by the way, if you were to pause this video and just look at the number of times in the yellow trend, the yellow structure, so anytime after November 14 forward, where Tesla was A, above the 200 propulsion, and B, went down and touched the gray zone of the daily price movement range, nearly every one of those resulted in movement higher. So if you're a Tesla fan, saying, okay, Rag, I know you're telling me not necessarily to trade it, but if you're a Tesla fan, look at the daily price movement range. And I do want to mention, gang, only because when there are sales, all right, I would love for y'all to be able to pick this stuff up on sale. Daily price movement range is on sale for the New Year's until the end of the week through Friday. So if you're looking, oh yeah, Rag, look at this. 1, 2, right? Look at every time we touch the gray zone. That's the accuracy. And so if we do it again, above the 200, great opportunity. And lastly, of the magnificence, NVIDIA. So the magnificentness, we're going to make words up now, is going to depend on A, the trend, and B, whether price can reach the daily price movement range. Look at the accuracy in NVIDIA too. Okay, so yeah, it's going to be worth waiting for some of these stocks in the Magnificent Seven to reach the gray zone. All right, so that's the criteria. I would love to have a green trend, which is to say an uptrend. Would love the daily price movement range to be in play, and I would like it in or above the 34 EMA wave. These are all the signs of follow through to the upside and support. Okay, and those are the things that we want to have, right? This is basically, okay, Rag, what's the mindset? Focus on the super trends. Focus on those things that are really strong. Make those the priority. Don't make the non-trends priority. But once you've exhausted the opportunities and the trends, then focus on daily price movement ranges and non-trends. And then a couple other sectors that I want to, again, point out. Financials. We're going into earnings, gang. If you're looking for bullish runs into earnings, not through, right? Boom. XLF. There's a number of stocks within the XLV that are bullish. And I'd be careful with XLE. Even though XLE was a leader today, let's put it on the back burner. So I'm going to mention that here. Put on the back burner. All right? Not a super trend. Okay. So then now, as we wrap up, right, what I want to remind everybody, I'm saying this as much to myself, what's the catalyst? Okay, Rag, I know what I'm looking for. I know the zones we're looking for. What's going to be the catalyst? Tomorrow's hot zones. Jolts, right? Our jolts, our PMI, our ISM PMI, and then finally the biggie, FOMC minutes. Use the timing of these events. Use the volatility of these events to put on the trade. That's the plan, gang. All right, I'll see you in the next update.